It's the last Sunday before the end of January, and with 4 weeks into the books, we've seen quite a bit of activity in a lot of categories, and a couple of categories we haven't seen so much activity in. So, this week's show, it's all about appreciation, my appreciation for you, and also appreciation of the real estate market. We're going to talk about market appreciation this week, so stick around. Hey there, it's Les Solgrove. This is Simply Des Moines Market Values, Week 4, 2025. We're going to talk this week specifically about Metro, the Metro market. I don't do this enough, I've been told. And we're going to talk a little bit about what's going on in the Metro markets and also end the show basically with the appreciation of values. I pretty much talk about this in the annual report, but I kind of gloss over it a lot of times because I just don't feel like I have the time to do a deep dive on that. So that's what this week is all about. We're going to kind of button up last week's show where we talked about price reductions, a little bit about pricing, and then we'll jump right into appreciation of values. I think you'll be interested to see where we are this year. So, all right, first things up, we have the dashboard, and you'll notice one thing right over here on the right-hand side. Inventory of homes finally did not keep up pace with the first 3 weeks of the year. In fact, all three categories, active pendings and solds, are actually just a little bit behind from the previous weeks, but either holding right on track with last year or just a little bit still ahead in the listed homes from over last year. But again, remember we had all that snow in January. We're just 19 closed home sales away from the same period of last year, but with this being January 26th, I'm going to expect that this number is going to rise dramatically this week as we get a lot of those end of the month closings in before next week's show. So next week's show, well, let's talk about that in just a second here. We'll kind of save that as a tease there. Um, Other than that, no big surprises here. The mortgage rates kind of came down just a tick this week. They're back under 7% barely. And I think locally, I think we'll see interest rates coming down a little bit too. So we're going to watch this. Next week's show, we will drop off February of 2024 and bring in March, and we'll have the February numbers. So this is a rolling 12, 13-month graphic here. So, all right, well, let's get into the big show here today here. So the metro market, like I said, I didn't really talk about this as much as I probably should over the course of the year, and I'm going to try to do better this year to do that. This is a map showing you the communities that I consider the metro for Des Moines. From Polk City to the north, Ankeny, Bondurant, all the way around to Carlisle, Norwalk, and Cumming on the south. Cumming is a little different community. You'll see that in some of the stats today. They predominantly sell single family and acreage properties out there. There are no condo townhomes incoming, so you'll see a couple of blanks there when we get to the condo townhome stuff. And then, of course, the western suburbs of Waukee, West Des Moines, Clive, Urbandale, and of course, Grimes up on that northwest swing. So the Des Moines metro market, as you all recall, is broken into 7 different categories from northeast, northwest, east, west, southeast, southwest, and then Des Moines downtown. So what you don't see is those breakdowns on this, but this is the entire metro that I track. So with that, let's jump right in and talk a little bit about the average price of reduced discount average of reduced homes. So this is kind of a button up for last week's show. And what I did here was I took the last bit of information from last week and I spread it out over 12 months to give you an idea of maybe which months are, a little bit more negotiable, if that's the way to look at that. So, for example, in single family resale properties, this does not include, by the way, it does not include new construction because they're their own little animal. This is existing homes only, but single family, no condo townhomes here. And February of last year was the best month to, if you're a home buyer, to maybe get the best negotiation overall. Again, there's better and worse deals than this throughout the market, but this was the average for the month of 7.2% off of list price in February. We're seeing just obviously quite a bit of negotiation this year versus previous years. It wasn't that long ago these numbers would be at zero or even plus percentages of list price to sale price. So we're kind of back into that normal section or that normal part of the marketplace. If you're looking at condo townhomes, the end of the year really kind of slowed down for them, and we saw November and December jump above 5%. We saw that again in March of last year. We were just at 5% for March and April. Kind of that typical spring market is when that really dropped down. So the lower these numbers means the less negotiation on average was taken on those homes there. So this is all price points, and condo townhomes, no new construction on that. So if we switch gears here just a little bit as we kind of transition into the appreciation portion of the show, we're going to talk a little bit about metro average sale price. And this is the first time you see kind of the metro areas that we described earlier across the bottom here. And they're ranked in highest average sale price on the left to the lowest average sale price on the right. And I like this graphic a lot. If you're working with a buyer and they're looking for homes and they're asking you, guys, where can I find the majority of my price point homes? So let's say somebody is looking in that 3 to 350 range. What you can see is right here, Carlisle, Pleasant Hill, Bondurant, Altoona is kind of that 3 to 350 sweet spot. Doesn't mean there aren't more homes in those areas, obviously, priced above that or below that, but these were the average sale prices for those areas. And if you're going on a listing appointment and you're trying to list something in Carlisle, and they're trying to tell you that their home is worth $450,000, that's quite a stretch from the average sale price across the board there. So again, not saying that those homes aren't out there and there isn't a house in Carlisle worth 450. It's just you've got a little bit more ammunition if you need it to talk a little bit about average sale prices. So averages are just that. It's the highs and the lows and divided by the number of sales. So all the way over here to the right, you can see Des Moines East. The average sale price is about just under 150, and coming out here, the acreage in larger lots, 623. So quite a spread there, which is good. We have pretty good diversity in our pricing here. As far as existing condos and townhomes, again, these are existing only, no new construction in these. You notice now to the far left, we have Des Moines Southwest for condo townhomes. That's kind of my neck of the woods. It's 357,806, and these can sometimes be a little deceiving because I know that there's maybe not as many condo townhomes in the Des Moines Southwest market over here that I'm in, but of the ones that did sell, they were at the highest price. So obviously, you're going to do your own research, and you can see again Des Moines East, another anomaly there because there just really aren't that many condo townhomes. This was probably an older condominium area that got that $100,500 is kind of the average sale price in that. So again, the players that you kind of saw at the top end are now kind of here at the middle or the lower half, like Altoona, Grimes, Ankeny, and Urbandale, and West Des Moines. Those are all in the under half point of the averages here. And that kind of makes sense because I think some of those marketplaces, they looked at the condominium townhome market as the jump off point for a lot of buyers the last several years. And they're the reason why they're probably increasing some of their resale single family home properties as well, because there's that ability now to start to move up a little bit. If we aren't going to get it in the pricing points, we're going to see that kind of start to happen here in the metro and some of the areas here. So as far as the rest of the show, let's talk about homes value or price appreciation. And I wanted to set out some of the rules here and kind of set the stage because there's a real basic definition for a price appreciation, and it's effectively the increase in that market value from of the home over time. And that's the key word there is over time. You just can't buy a house and expect it to appreciate by a large amount every year or the next year or even a few months here. Those times, maybe did happen in the COVID era, but we're kind of back over that. We're back to normal markets, and there are certain factors that contribute to this appreciation. And as I started to look at these, I thought, well, guys, can you really even control some of these? So market demand, and my initial response was, yeah, if there aren't buyers out there and you've got a home to sell, can you really control that market demand? And my initial answer was, well, not really. But then the more you think about it, What if you own that specific home in a neighborhood? Maybe you're close to a school and you've got a five-bedroom, two-story, and the rest of the homes in the neighborhood are you know, four-bedroom, smaller two stories or ranches. You might have the ability on your own individual property to somewhat contribute to your own market demand. And so you can see that, market demand doesn't necessarily mean it's from the buyers out there. It might be something with your property. Maybe it's a zero entry property, or maybe it's a condo townhome and it's got that killer parking spot and it's first floor or the penthouse or close to the penthouse. So market demand can play a big role in there, and I think depending on your home, you can leverage that to your appreciation of value. The next one down is economic growth. And does economic growth have any bearing on what you can do? Well, I say yes, because I mean, granted, the economy is the economy, but gosh, if you are, involved in your city, maybe you're on the city council, or maybe you're on planning and zoning, or maybe you're just a outspoken advocate in your city. You can help encourage new economic growth to your areas and be a part of that. And obviously, this is an area that you can help increase, your home values. If you're just sitting back, riding along, hoping for the best, then, maybe this is an area where you can maybe help your particular property or neighborhood kind of increase its value. So that's one. Speaking of neighborhoods, yes, neighborhood watches, neighborhood associations, neighborhood cleanups, those kind of things do add value. And we've all seen these homes in great neighborhoods, and you turn the corner and there's that stinker on the corner that never mows their yard or whatever, and you get that bad feeling. Maybe a neighborhood association or a neighborhood cleanup week where everybody chips in and helps everybody else out definitely can increase your appreciation of your overall values just by jumping in and getting to know your neighbors. I mean, that's another thing. You talk about great neighbors, and maybe you have a block party. So those are the kind of things there that you do have control of. Now, this one's a little tricky. This is inflation. And I would say that of any of the ones so far, this one is probably the one I'm going to put an X on. You really cannot control what's going on in your area overall from the rate of inflation. However, you know, I think a lot of homeowners' strategies out there is to say, you know what, I bought the house. I'm just going to coast. I'm not going to, I don't care about the market demand. I just, put my home on the market. I'm going to coast. I'm going to let inflation be my guide. And, if inflation goes up, yes, it's true that, if the cost of other goods go up, your home value probably is going to go up as well. But that's the lazy way to get increased value. You want to, contribute to your property, your neighborhood, the economy of the local area, and those are how you can increase and add to your value, not just waiting on inflation. But the best opportunity for you to increase your valuation of your property, and this one goes hands down, is when you buy a home, do everything you can with the funds that you have available. Don't go into debt on this, but if it means maybe painting the house this year, or just doing yard cleanup, do a little bit of outdoor easy landscaping. Property improvements are obviously the very, very best way for you to increase your home's value. I mean, there's the cost versus value report that comes out every year. I should look that up. I haven't seen that for a while. But the cost versus value report will actually give a report of which improvements actually give you the best bang for your buck. And I know in the past years it's been kitchen and baths and windows and siding and those kind of things that have long-term. They're a little bit higher cost, but they have long-term valuations to them. So obviously, property improvements. Put that together with the first three, and don't let inflation just be the one you're not going to just glide along and wait for inflation. Do what you can, and so that's the best way for property appreciation. So, with all that said, let's talk briefly about what you're going to see next. And this is my disclaimer. It's on every report that you'll see forward here when I'm talking about appreciation of value. And that is that the following data that I'm going to show you reflects overall market trends and is not a precise valuation of any individual property. You'll see a number here pretty darn quick, and you're going to go, I don't want you to go out and down the street and tomorrow and next week and say, hey, I just saw a show this week. It said that homes in Des Moines appreciated by X percent. Therefore, you know what? We're going to price your house up based on that particular value. And I'll show you why you can't do that here in a minute. But let's jump right in. I'm going to unveil the number for this year for single family metro style homes. This is when I say styles, this is all styles, 2 stories, ranches, everything. And again, no new construction in this data set. This is all existing homes. And what this is a appreciation of year over year. And the appreciation, the average sold price this year in the Des Moines Metro for single family homes was about 328. And if you look all the way to the left, you go down here to 2007, which is right here. I was getting mixed up here when I tried to do this on screen. 2007, we were at 1.4% appreciation. We saw the mortgage meltdown in 2008-9, pretty flat through 11. We kind of came back and started to see some pretty decent appreciation in 2013. We were just kind of chugging along here around that 4 to 5, 6%, which is wonderful. I mean, if you can kind of overall see a standard 4 to 5% increase of values across the board, and you're doing the improvements on your own homes, that means that yours is going to be higher than this. 2021, obviously, this is the anomaly year. This is COVID years where we saw that artificial appreciation, where it was, the shortage of inventory, and we saw double digits there. Kind of calmed back down the last couple of years, but so far this year, or I say last year, 2024, we saw about 5.7% increase of value across the board. Now, remember, get my face out of there for just a second. This data overall reflects market trends is not a precise valuation of any individual property. Say that with me. It does not include, this is not overall, does not include an individual property. So, all right, hammered that in. So let's go ahead now and start to see why I say it isn't foolproof here. Because remember, it was 5.7 over here. Now, by the time we look at this in the single family and we look at just ranch style homes, one of the more popular style homes in our marketplace, in fact, it performed very, very well the last several years. 8% over the pre-COVID years, 12.5% in 2021. But this year we saw actually the ranch style homes kind of sit just a little bit lower, and I think maybe we haven't seen that many. We haven't had a listing shortage. We've been seeing, probably more buyers looking maybe in a little bit larger footprint. And, that has kind of come together and said that now ranch style homes overall, again, not your house. If you have a ranch style house, it didn't just go up 3.2. Might have gone up more. It might have gone down a little bit more just based on your condition and what you've done to it. But 3.2% is the number for ranch style homes. And you think, well, gosh, what else is out there? What's the next one up? Surprisingly, split level homes have been very popular last year. They saw a 4.3% increase year over year. They took a beating back in 2008 to 2011. But a split level is kind of an in-between house between a 2-story and a ranch. You kind of get the feel for a ranch, but also the feeling of a 2-story with the multi-levels. It had its increase this year of 4.3, and then overall the most popular style home, which is kind of consistent out there, is the 2-story, and it saw overall again 7.5% increase in values this last year. So if you are a homeowner with a 2-story out there, maybe like me, you're sitting in it with 4 bedrooms, and I'm currently not empty nesting anymore. But if that time comes, I'm going to be in a good position because I think the 2-story is going to be a pretty good price point and a good appreciation style out there. Again, your mileage may vary here. So let's look at how this compares to the condominiums. And this is condos, townhomes. You know what? This is about time that DMAR should be splitting condos and townhomes. We say that every year, but it's just mixing apples and oranges in this data. But this is all we can do. So all styles of condo townhomes. So your apartment style versus your ranch style, single family detached condo townhomes. All styles came in at about 5.1%. So not too far behind the single family. Again, a pretty good number there. If we look at the ranch style condo townhome, again, Some of these are mixed in are probably apartment styles, but these are the ones that were classified in the MLS garbage in, garbage out, so it'd be like a standalone or a twin townhome, but it's a single story. So a ranch did not appreciate as much as these other styles, which again, we're kind of used to seeing that. And then the condo 2 stories, which these are probably more of the townhomes, up 3.8%. So again, they really all took a beating back in the mortgage market, mortgage meltdown years, but have all kind of come back pretty steady there. So 3.8. All right. Getting close to the end here. Let's kind of break down appreciation by city because I know you're also going, well, what was the appreciation in my community in the metro? And so I created this graphic this year. It's a new graphic that we're going to include in the year-end report. And again, this is existing since we were on condos, townhomes. We're going to start with those this time. This is metro appreciation by city. Again, there's some pretty large numbers on here, and I double check them. It's a lot of this is due to the fact maybe it's lower inventory and there's been some swings of inventory. So the top one you go, well, good Lord, that can't be right. Windsor Heights is at 34.2% in of appreciation in townhomes. Well, there's a lot of uh, older style condominiums and not that many townhomes in the Windsor Heights market. These all are likely lower number of units of sales, and some of those were probably just a little bit higher. So when you have lower number of units of sales and you see a large swing, this is where we'll start to see some of those larger swings. So again, this is exactly why I say do not look at this and say, "Oh my God, I want to sell a condo or a townhome or a condo in Windsor Heights," and whoever has that for sale is going to see a 34% increase in value. That's not going to be the case. It just happens to be the overall report here. You can see that you get down here around that closer more to the metro average here. It's more Des Moines Southeast and Ankeny, believe it or not, is right in that 5.9% unit there. Des Moines Southwest, we talked about that earlier, how we really don't see that many condo townhomes on the market. There's plenty on here, but the ones that are selling seem to be selling at a little bit higher price point. And so again, the green shows a positive appreciation, and then there are red ones down here. So West Des Moines, the appreciation, a lot of this is probably due to just we're just seeing an overabundance of the condo townhomes in that area. Now, a lot of this could be driven by new construction, although this doesn't include new. If there's a lot of competition between new construction, and that could be affecting why maybe the resale condo townhomes in West Des Moines or Des Moines Northeast, yeah, Copper Creek maybe in that Des Moines Northeast. This may be why we're seeing some of those traditionally numbers that we would think would be higher are actually coming down. So there's all about market balance here, and it's very possible and it's very feasible that we see some large numbers jumps here. Des Moines East, again, not very many townhomes, condos over there. I bet there's just a handful. I didn't do the count, but again, 41% lower value could be, 7 or 8 sales over there, if even that. And it just could be that those were the lower priced ones from a year ago. So that's why we're seeing that large drop. Same thing with Carlisle. That one is a little bit different. Again, but that's what the numbers show. I verified them all up here. So let's see what we're looking at here now with existing homes. Not quite the large swing from up or down there, but again, Cumming, Iowa. Again, this is 26%. We're seeing a lot of people still wanting to move out of the metro. There's a lot of new development out there that's driving the resale prices up, which again, these are resale prices. So Cumming, Iowa is going to demand a little bit higher pricing coming into 2025 for homes that even somebody may have bought a year ago. Is it going to be a quarter of 25% more? Probably not across the board, but if you find that one diamond out there that has just been it's been sitting there and not on the market, could be a good opportunity for somebody. So Carlisle going from bottom to second from the top up here again. A lot of new construction in Carlisle, and it's probably boosting the resale properties out there. Des Moines Southwest, same kind of thing there. So you get all the way down, Windsor Heights, for whatever reason, it's our landlocked community in the metro, and that one can be hit or miss. There's definitely a market for Windsor Heights homes. They typically sell very, very quickly. It's just that we didn't see any large appreciation of value overall, which means that the home prices are pretty steady, which that in itself is a good thing. So anyway, that's kind of those markets. We look at the overall now, taking out the last one there was existing homes. So if you combine these two from existing homes and condo townhomes, remember the condo townhome one was way over here. Well, that tells me right there that there wasn't that many condo townhomes in those higher negative appreciation properties. So very, very similar to the existing home one. So these are graphics I want you to take a look at there at DesMoinesMarketValues.com in the show graphics each week, and they'll also be included in the year-end show. Won't go into great detail like these like I do at the year-end show, so that's why I'm kind of glad we had time today to talk about them. So all right. Well, hey, I'm sitting here with my fingers crossed for next week's show. And yes, I use ChatGPT to create a fingers crossed. I don't know if you can tell what's wrong with that picture, but it's pretty obvious there. My goal is to record the year-end show next Saturday and drop it Sunday. I'm going to be out of town on Sunday. And so if you don't see the dashboard on Sunday until Sunday night, I will add that to the slides when I get back, but I'm going to try to record this all next Saturday, and we'll drop it Sunday morning or Saturday night late, somewhere in there. And it's going to be a long show. Traditionally, my year-end shows are about an hour long. So I hope that I'll have it broken down by categories or chapters, as it were, little jump-in points, as I think I called them last year, and we'll kind of see what's happened in 2024. So with that, thank you again for watching. Don't forget to subscribe to the channel. Everything is available at DesMoinesMarketValues.com. I'm Les Solgrove. This is Simply Des Moines Market Values. Take care, and we'll see you all again next weekend.